For the first time in nearly a century, the United States crossed a dangerous financial line. In 2024, the US government spent more money paying interest on its debt than it spent on its entire military. That means America is now spending over $1 trillion a year. It's not on soldiers, not on weapons, not on defense, but simply on past borrowing. And history shows something uncomfortable. When powerful empires start spending more on debt than on defending themselves, they usually stop being powerful for very long. Spain learned it. France learned it. Even Britain learned it. The question now is simple. Is the United States heading toward the same fate? Picture a superpower preparing for the future. New fighter jets, massive aircraft carriers, advanced missile systems. Now imagine that the biggest expense in its national budget isn't any of those things. It's interest. In 2024, the United States crossed a line that historically has been a warning sign for powerful nations. For the first time since the early 20th century, the US government spent more money paying interest on its national debt than it spent on its entire military. Over $1.1 trillion went not to soldiers, not to equipment, not to defense, but simply to creditors. At first glance, that might sound like a boring accounting detail, but history suggests something far more serious. Because when great powers reach the point where debt payments dominate their budgets, their global dominance rarely lasts much longer. This pattern appears again and again across centuries. Empires don't usually collapse because they suddenly become weak. They collapse because their finances quietly collapse first, long before the world notices. One of the earliest examples comes from 16th century Spain. At the height of its power, Spain controlled vast territories across Europe and the Americas. Its fleets carried enormous amounts of silver and gold from the New World back to Europe. On the surface, it looked unstoppable. But behind that power was a growing financial problem. Spain was constantly fighting wars and maintaining a huge imperial bureaucracy. To pay for it all, the monarchy borrowed massive amounts of money. At first, lenders were eager. After all, lending to the most powerful empire in the world seemed safe. But the numbers started spiraling. Within just 20 years, interest payments consumed nearly 90% of Spain's government revenue. Think about that. Almost every coin the empire collected in taxes was immediately used to repay lenders. Spain technically remained powerful, but financially it was suffocating. The government defaulted on its debts multiple times. Its ability to fund armies and fleets weakened. Soon, territories began slipping away. Portugal regained independence. The Netherlands successfully revolted. And the empire that once dominated the world slowly lost its grip. A similar story unfolded in France. By the late 18th century, France had spent decades financing major wars across Europe and beyond. Among them were the War of Austrian Succession, the 7 Years' War, and support for the American Revolution. These conflicts were incredibly expensive. To fund them, the French monarchy borrowed heavily. Eventually, the situation became unsustainable. More than half of the government's budget was going toward interest payments alone. That meant less money for governance, infrastructure, and stability. Taxes increased, public frustration exploded, and in 1789, the financial crisis triggered something far more dramatic than a recession. It triggered the French Revolution. The monarchy collapsed, and an entirely new political order replaced it. Another powerful state followed the same trajectory, the Ottoman Empire. For centuries, the Ottomans controlled key trade routes connecting Europe, Asia, and Africa. But by the 19th century, debt had begun to overwhelm the imperial treasury. Around half of the empire's revenue was being spent simply servicing loans. That left little room to modernize the military or strengthen institutions. Eventually, European creditors stepped in and took direct control over Ottoman financial administration. Imagine losing control of your own national finances to foreign lenders. The empire's weakness became obvious to the rest of Europe. Soon it was widely known as the sick man of Europe. Not long after, the empire disintegrated. Even the British Empire, once the most dominant global power of the modern era, faced similar financial strain. After World War I, Britain was drowning in debt. By 1922, interest payments had surged dramatically relative to national resources. Meanwhile, military spending was constrained. British government simply couldn't afford the same level of defense it once maintained. Those financial limitations influenced Britain's political choices in the 1930s. When Nazi Germany, under Adolf Hitler, began expanding its military power, Britain initially pursued a strategy of appeasement rather than immediate confrontation. Part of the reason was economic reality. The country had limited financial capacity for another large war. By the time Britain rapidly rearmed, the situation in Europe had already become dangerously unstable. History repeats the same lesson again and again. When interest payments on national debt start competing with or exceeding spending on defense, the balance of power can shift. And that brings us back to the United States today. The US remains the largest economy in the world. Its military capabilities are unmatched. Its alliances span the globe. But its national debt has grown to extraordinary levels. As interest rates rise, the cost of maintaining that debt rises as well. That's how the US ended up spending over $1 trillion annually just to service past borrowing. And projections suggest this burden could grow significantly in the coming decades. One major driver is the structure of federal spending. Programs such as Social Security and Medicare are becoming more expensive as the population ages. Healthcare costs continue rising, and millions of Americans depend on these programs for retirement and medical care. At the same time, political divisions in Washington make major fiscal reforms extremely difficult. As a result, debt continues accumulating year after year. This means the United States is on the verge of collapse. America still possesses enormous advantages. Its economy remains highly innovative. The US dollar functions as the world's dominant reserve currency, and global investors still view US government bonds as among the safest assets available. But history offers a warning that shouldn't be ignored. Empires rarely fall suddenly. Their decline usually begins quietly, hidden inside government budgets. A little more spending on debt service, a little less available for defense. Then the gap slowly grows larger, and eventually, leaders face difficult choices about what they can and cannot afford. The real question isn't whether debt matters, it's whether the United States can manage its finances before the pressure becomes too large to ignore. Because if history is any guide, the greatest threats to powerful nations often don't come from foreign armies. They come from their own balance sheets. The outcome of that financial battle could determine the shape of global power for the rest of the century.